Yeah, hey mate. So I thought I'd make a little video and we'll just talk through this. I did, I just didn't have time to make a video on it. But I thought, why not? It's good to make a video on it and kind of run through my thought process. Um, when I was posting about AVAX up here. So to start with, dips on it. The pattern here itself, it's coiled up. It's too small of a pattern, right? Look here. Here's a triangle. What happens? It breaks down. Here's a little triangle, a mini triangle right here. What happens? They break down. Um, that's all we have there actually. But there's one here and there's one here. Uh, Often these do like to break down because they're coiled up. Um, there's too much choppiness. There's too much, and there's liquidity. See, when you get a large candle like this, a green candle like this, a breakup, there is liquidity in here. This is almost like a gap, right? When I view this, the way I view this large green candle is I view it as a gap, and these gaps often like to get filled. So, with knowing that these gaps like to get filled, and these patterns often like to break down first before maybe going higher. I just see it over and over and over again. You know, can they break up sometimes? Yes, but we've already moved a substantial amount. So it's okay to think that you can get some sort of a retrace back down. So that kind of leads me to the thought process that, dropping back down to fill the gap, and gap in inverted commas, it's not a real gap, it's a breakup. But if actually let me look at this. Yeah, look at this. Perfect. Okay. So look at this here. Look at the volume profile. There is nothing here. Basically, it is a gap. There's no traded volume in here, which allows for a gap in price. A gap, well, it gaps up. There's nothing traded there because there's a large volume traded there that was possibly a market buy that shot the price higher. Somebody FOMO'd, some exchange, some whale, some whatever, but somebody with large money created this breakout volume, and breakout volume often leads to higher prices. It dips into here, and I was saying that I felt that this was going to break down, and it dips down into breakout volume, right? It dips down into breakout volume are usually good buys for higher prices. Now, it's hard to say that it's hard to say in the moment that this is going to go 10% straight away. You just be good support, but you think the price will come back up and test the highs, and then if price can break out through the highs, well, all well and good. It continues going higher, and you've got a beautiful trade with very low risk. The other complementing factor was, if you just draw a simple fib from here to the highs to here, well, you can see this is the golden pocket, right? In between the 50 and the 61% right in here, which is a confluencing factor with you're coming down into this breakup in the breakout volume in the gap. And these gaps, they like to stay in the top third or top half, I should say. Uh, like there's your full candle. So if you just go half of that somewhere there, well, that is where it likes to stay in the top half of it. Because if it's strong, like look here, that's a mini breakout volume, and well, the dip back, there is no breakout volume actually. It's a very bad example. Break up and it never dipped back down fully. There's no volume there, so it's a bad example, but it's got similarities. Not of the candle anymore. It dips a third, whatever, and then continues higher. Uh, that was another factor on it. The dip in it should not dip too low if this is going to remain strong. The other factor that I was looking at is okay. So when I was looking at this chart, it was somewhere there before the breakdown, and it was just coiling. But you can see once you get breakout, once you get breakout like this with breakout volume, right? What happens in the moving averages? Look at this gap here, right? This gap right in there. That gap is powerful, right? That gap is a powerful factor that many people don't understand and don't even know about. I think I've made a channel on it. I've made videos on it in the past. Um, but here's one here as well. It's a mini one here you could see that this was a larger gap in that moving average. And there's it started here, but when you get this wide gap here, it's a sign of strength, really, because your moving averages are separating out, and that's a sign that this large candle right here moved those moving averages trajectory to the upside, creating this gap. And that gap then, when you drop back into it, often can be support. Now, eventually those gaps will break and whatever, and it'll break down. But for a period of time, they should continue to. Here's a great one. Like this is a fantastic one, um, because you can see that all prices now above averages here. Let me move this out of the. Oh, sorry, that's the day trading tool. That's the weekly and the 3-day open. Um, Prices above all moving averages here, but what starts to develop here? Look at the gap. Look at the gap in the moving averages here. This is very powerful, and the 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 dips, even though it's extremely choppy, but you can start to see this gap forming here because it's a gap above all moving averages right there. So, uh, could you buy here? You could buy right here. And if it does drop into here, well, you could add to your position because in theory, when you have this gap, that's a sign of a strong breakout and you're breaking above all moving averages. Is, uh, you know, nothing works 100% of the time. It is a game of probabilities, but the probabilities are that all these moving averages are now underneath price and they can start to support the price to try and go higher. So any dips down are can be buys. So if you did buy there, well, you could have added here, somewhere down here, because this is uh, I was going to say a 50% retrace, but maybe it's not. It's a decent dip back down, and then you would really have an average of somewhere here. Then, if you do get a next leg higher, of course, you would have been in profit. But this breakout above all moving averages should be considered, especially when you start to form these gaps. On top of that, well, if you go back here, obviously there was a bit of a pressure cooker developing. You have this white 100 moving average curling over the top of price, and once price starts to get above the white 100, you can start to be bullish in here. You could also knife catch and watch for the stop on. See these stop ons down here? You get the price down here, and you see price reclaiming, and once it reclaims, you can start to have a more of a bullish bias. It's a bit of a knife catch. But I'm getting sidetracked on the trade itself. And the reason I'm making the video is because you asked, how do you know this? It's just from staring at charts for thousands and thousands of hours, I suppose. Um, Here, I just kind of posted about it, a screenshot from above. Um, yeah, you're saying perfection, but it is perfection. But the thing is, we will see a lot more of these, right? These are breakout volumes, and we will start to see a lot more of these as the market heats up. So this is not an isolated incident. This can be repeated over and over and over again. And down below, I just posted, yeah, very nice. Which you can see it was, yeah, it's just about 10% there. From in here, if you bought in the green box, roughly about 10%. Um, yeah, it looked like breakout volume, and it was, right? You don't know for certain that this breakout volume is going to hold, but you have a good high probability that this breakout can hold. It's if you can sort of tell it's breakout volume. This was a pressure cooker as well. Look at this pressure cooker, and once price got above it, ideally we should have been long in there if we seen that, because you're now above all moving averages with a pressure cooker and the white 100 moving underneath price with all of these moving averages supporting price. That is the reason breakout volume came. It's understanding, well, whoever bought here understood the setup. See this setup right here? This is the bullish setup. This is the continuation setup. So the bullish pressure cooker above all moving averages here is the real setup. This is the continuation, the follow through setup. Um, but obviously, it's good to understand both, because when you understand both, well, okay, I missed this one, I can get on board here. Or if you see this one and you get in before the breakout volume, well, you've understood the pattern correctly and you've understood the structure correctly. I'm looking at it there. I shouldn't be looking at it there. Um, I should look at it here. So, well, you can see right here. And yeah, I keep the day trading tool on because it gives the 3-day open and the weekly open, right? It also gives some extremes and stuff. You can turn these off if you want. But understanding where the 3-day open and the weekly open is very important. You can see that we're already in an uptrend. This pressure cooker here, this dip, once price start to go above the the white 100, this pressure cooker, you're bullish here because you're above all moving averages, and the white 100 is coming underneath price. But what else is it? It's flipping green after a dip. This is a dip and then a flip green on a 3-day chart. We'll look at that now. And and once it starts flipping green on a 3-day chart, well, it can continue to stay green. So if we just look here, look at the 3-day candle, well, what happened? Well, there it is right there. That's the setup. That's the setup. A small dip and a flip green on a new 3-day. This is a strong close, and then you're getting continuation to the upside because on a new 3-day candle. In that small dip there is that little pressure cooker that we were talking about, and it flipped green, and then you get that 10% bounce. And you don't know you're going to get the full 10% bounce, right? You're not too sure. You know the setup is there. You know your risk. You know you're managing your risk. You know how much risk you have. You know there's breakout volume. So obviously, if you bought here and you want to start it, you want to see that holding, and you have this space here, of course. Now also, well, it's flipped green on. Now it's we can call it the golden trend, but it's called this indicator. This indicator is called the market condition, um, because it tells you the market condition. If you are bullish, which this is, green is bullish, yellow is super bullish. Like you can see here, intraday is bullish, your short-term trend is bullish, and your mid-term trend is bullish. So you can get strong moves up on that. And once this starts flipping green right here, well, it kind of caught that entire move. Obviously here, it's in dip mode. So if you're in dip mode, the intraday is going down. Okay, so you don't have it's not always the best for knife catching, this indicator, because fast drops or drops in the market will not show up on intraday because that's a bearish drop. It's going down. But once it starts to flip again, you can get on board here, and it's more safe. If you're knife catching there, okay, we understood the level, but as an indicator, safer for the indicator to start to buy here tail indicator to buy that dip. The indicator only meets all conditions when it has moved up a little bit and starts to flip green here and then continue to move higher. And I'm glad you like the indicator. Indicator is extremely powerful, and used as one of the most powerful tools you have day trading tools you've ever seen. And for me also, it is one of the most powerful day trading tools I've ever seen. Now, does it need a little bit of work or tweaks and stuff because sometimes it can fake out on the start and stuff like that? Yes. But there's always going to be fake outs in the market. That's the hard part about trading. There is no holy grail really. But the holy grail is if this can flip green and stay green or flip golden and stay golden, means it's trending to the upside. So that's obviously what this indicator is trying to do. It's a trending indicator. Now, very important as well. Sorry about the long video. The VWAPs. VWAPs are underestimated at times. When you start to get like institutions use VWAPs, hedge funds use VWAPs. So when you start to get above all VWAPs, which was right here, that's a time when you start to want to be bullish as well. Because when you're above all three VWAPs, it's very powerful. Not only does this tool incorporate the three most powerful VWAPs, it also incorporates trend and price for time frames and moving average. So the tool itself is a confluence of factors. But obviously, the more you study the tool, the better you get at using it, basically. And it's the same with anything. Practice makes perfect. And you said here, you said it's stupid. I got in because you wanted to sleep, you took profit about 1%. Well, you got 1%. That's fantastic. Honestly, that is fantastic, and it's definitely not stupid uh, because you need to sleep. Timing is everything in the market. That's the thing. You probably wanted to watch the trade and everything else. It's definitely not stupid. It's fantastic. You got in and you used it and kind of understood the move a little bit. So yeah, very, very well done, and very, very well done on your other trades. I was going to go and find them there. I'm not sure where they were right now. Yeah, I just found them here. You took a trade this morning with a golden trend indicator. There was that was green, and all our other signs were also bullish, up 3%, and 3x leverage was 9% on the day. It's fantastic. There's no way you would have taken this without the golden trend indicator. But that's fantastic, and it is really, really powerful, and very, very well done on that. Same story with C98, up 2.5% on 3x leverage, thanks to the indicator. Fantastic. So Yeah, beautiful, beautiful work on that. And yeah, excellent, man. Practice makes perfect. But I probably should share this video because I run through uh, the breakout volume. So maybe I should share this in the breakout volume channel because it is a breakout volume. It is what initially alerted me to this trade. There is a lot of other factors, but it's definitely a video probably people can learn from and look out for. Dips into breakout volume are often very good buys. Or maybe do we have a trade strategy channel? Maybe I could add the trade strategy channel. I need to have a look and see what the story is. But anyway, mate, yeah, thanks for the feedback on the trending indicator, the market trend and the market condition, and well done on the trades.